right. All right, guys. Coming in live again. Here we are. Back again here. Going live again. Making sure people understand that we're here to give back and give back knowledge and be able to give back and help people out in terms of knowledge, educating them, telling them how to be able to get their money up so they're not broke and poor, and being able to understand the different concepts that a lot of people don't understand in school. So it's your boy Coach Kenny here. I'm here live on YouTube, on Instagram, and Facebook. Whichever way you are, please like, please comment, please subscribe wherever you are, and then also be able to ask a question if you have a question. I'm gonna let some people come in. I see some people coming in on Facebook. I see some people coming in on Instagram. I see some people coming in on live on all the different platforms. So if you are here, comment where you from and what you do. So if you're from Cali, put Cali, and then put investor, wherever you're from. If you're from Switzerland and you ride snowboards for a living, put Switzerland and put snowboarding. You know, it's funny because I know a guy actually who makes a lot of money snowboard. Actually, not snowboarding. He makes a lot of money BMXing. So he rides BMX bikes all around the world, and he makes a ton of money. Actually, I interviewed him on my podcast. Very cool guy, and I got him into to interview them because he was starting to get into real estate. So he was asking questions, and he was also coming on to tell us a little bit more about his approach to investing in real estate. He lives, I think, in Michigan, or he invests in Saginaw, Michigan. That's where he invests. Great market too, by the way, if you guys are looking at markets. But yeah, so wherever you are, comment where you are and comment what you do, so we kind of know what kind of people are seeing here and coming into the live here. So let me see here. We got Jim from Massachusetts. He's a landscaper. Good to see you here, Jim. I think, yeah, Jim, you came to my conference, my first seminar in Boston, so I remember you. Then we got Carl in California. No, sorry, Carl in Atlanta. Yes, you, Carl. All right, cool. What else we got here? Just comment where you from and what you do, so we kind of know what people we have in the room here. All right, so if you're somewhere, comment where you're from and what you do, and that way we can kind of see what kind of audience we're dealing with, so I can make sure I get the best value possible. All right, so comment where you and where you from, so we can kind of know where you're from, okay, and what you do. Cool. So we got some people in here coming, more people coming in. I'm letting them coming in. If you guys don't know who I am, I'm Coach Kenny, real estate investor, entrepreneur, teacher, educator, coach to lots of students in terms of helping them get into real estate, buy their first property, get into business ownership, learn entrepreneurship, learn financial literacy, and just pretty much I do this kind of like a way to give back, because I wish I had somebody to give me this information when I was younger. That's why I do this. So if you have questions, put them in the comments wherever you are, and we'll get to them as soon as I get a chance to answer all the questions. So don't be shy. There's no such thing as a stupid question. So this episode of Investing in Future is brought to you by the Investing in Future Real Estate Conference 2024 in Norcross, Georgia. We are having a bunch of speakers come on there and help you guys learn about real estate, about banking, about credit, about estate planning, all these different things to help you be able to improve your financials and get your mind right and get your assets right and get your liabilities low, get your income up, get your expenses down, and be able to help you guys improve your financial situation. Yep. So I got some more people here. I got John here in Florida. I got Cindy here in, is it Arkansas? Is it AK? Is it Arkansas? I think Arkansas. So you have a lot of people from all over the place tuning in to be able to learn from Coach Kenny. Like I said, if you have questions or comments, make sure you put them in the comment section below, Make sure you subscribe, make sure you like, make sure you thumbs up, and we can see how we can help you. If you have any kind of ideas about future shows, let us know also. We'd love to hear your feedback and your comments. All right, guys. So today we're discussing a big topic that a lot of people don't understand. A lot of people don't really confuse the two. So we're talking about revenue versus cash flow. Revenue versus cash flow. Now, if you never own a business, you will probably never need to even understand these words or never even use these words. All right. That's why I really teach people to be able to start a small business. Start a small one. It doesn't have to be something major. It doesn't have to be a Fortune 500, but at least you got to learn these terms and be able to educate yourself a little bit better so you can understand how a business works and how you can maybe possibly turn it into something that could be serious and make you some serious money. But the difference between revenue and cash flow. Revenue and cash flow. All right. So, if you're looking at a business in general, all right, overall business, whenever money is coming into the business, all right, whether that's sales or you're doing something, wherever you're getting the money from, that is revenue. All right, write that down. Revenue. All right, that is the money coming into the company, the money that the company makes on sales of products or services. All right, that is considered revenue. All right, so if you're looking at an income statement or a balance sheet, you're seeing revenue is probably one of the first lines up top, or sales, or net sales. Same exact thing, nothing different. All right, so revenue is the money that the company brings in every single day, every single month, every single year. Revenue. All right. Now, how important is revenue? That's a good question. I just got a question here on the live. So revenue is the lifeblood of your business. If you don't have revenue, you do not have a business. Most likely you're going to file for bankruptcy. All right. So if you do not have revenue for your business, you do not have a business. You have what we call a nonprofit, or you have what we call a defunct business, or you will be futurely bankrupt, or you will not exist as long as if you don't have any revenue. It's that simple. Now, when you're thinking about a business, revenue is probably the number one most important part of the business you need to focus on. Revenue is number one part of the business that you need to focus on. All right. So the way you acquire revenue should be the way you should be focused on every single day. If it's customers, you need to be marketing those customers every single day, every single hour. If it's a product, you need to sell this product every single place you think of, and everyone needs to know about your product. And that product better be solving a problem, otherwise that product will not move. All right. So if you think about it, right, any business that runs a service or product has revenue. All right, has revenue. Now, if you don't know your revenue, most likely you are going to be having issues with your business. All right, it's that simple. So when you are calculating what a business is worth, they usually calculate it pretty much on what kind of revenue this business brings in. All right, what kind of revenue does this business bring in? Now, the biggest part, understand the difference. Now, when you have revenue, this does not mean this is what you're taking home. All right. Just because somebody says, hey, my business makes $10 million a year, that could be revenue. Okay, great. But how much is he keeping? How much is profit? How much is cash flow? All right. So if you think about this, right, cash flow is what you take home after all expenses are paid. After all expenses are paid, what is your cash flow? It's that simple. So now, if you don't know what your cash flow is, all you're doing is taking your revenue minus your expenses, and you're finding out your cash flow. So And you can do this on a personal level also. So if you bring in $10,000 a month as a worker, as a person who makes money, great. Now, that's not your cash flow. You have taxes. So you're taking probably about 30% of that. So you're keeping about 7,000 off the revenue that you brought in from your work. Okay, now after that, you have other bills. You have the car that gets you to work. So you may have a car payment. Let's say it's $1,000 a month. Now you're down to $6,000 a month. You have insurance. Let's say $500 a month. Now you're at $5,500 per month. Let's say you have rent and mortgage. If you live in a house you own, mortgage, you have electricity, you have all these other bills. Let's take off another $2,000 off that. So now you're left with about $3,500 cash flow. After all bills are paid, cash flow, what you are earning, what you are going to keep at home. Now, when you're looking at a business, you're looking at not just mortgages and stuff like that, because obviously a company might have mortgage, some might have rent, it is, but same exact concept. So you take what your revenue is and you minus all the expenses, chop them off, and then you get your cash flow. Listen, the cash flow is the most important part of a business. Yes, revenue is great, but your cash flow is what you keep after you, which is what you eat, is what you get to keep after everyone else is paid. So for business, this would be cash flow. For your personal, same thing, cash flow. For a piece of real estate, cash flow. What are you cash flowing per month? Average single family home cash flow is about anywhere from $200 to $300 per month. Single family residence, depending on if you're doing long term. Now, if you're doing short term, rental, you're probably going to cash flow a lot higher than a single family long term model. Now, I prefer long term because I like the consistency. But I also love Airbnb, and I've done Airbnb, and I'm actually getting back into Airbnb because the cash flow is much higher, depending on the location of the property, depending on where it is, and what the booking rate is. You can make a lot more money cash flow. Now remember, because you're increasing the revenue by doing short term, you are going to have higher expenses because of the fact that there's turnover. Turnover is pretty much when someone leaves and you have to clean the place, you have to replace the towels, you have to clean the fridge, all these other things. That cost eats into your revenue. All right. So now the fact that you have, let's say, more per month, you might, instead of cash flowing $200-300 per month, you might cash flow anywhere from $500 to $1,000 to $2,000 per month on a single family property as an Airbnb property. So that's the difference. Revenue is what you bring in. Cash flow is after you've paid every single person and every single bill has been taken care of. Cash flow is what you get to eat at the end of the day. All right. Well, so what's more important to focus on? Well, listen, I think it's good to focus on both. But if you look at an income statement, what you're looking at is the first part of it is really revenue. So you got to get that revenue up because it really correlates. If you get your revenue up, you're going to have more cash flow, especially if your expenses are pretty much close to the same. So any business, usually cash flow is about 30 to 40%. So if you're bringing in $10,000 per month in terms of business, you're going to keep about anywhere from $3,000 to $4,000 cash flow after expenses are paid. Those are great margins. Now, the thing is also is, let's say you bring in more revenue, right? You're going to bring in more cash flow. So it's that simple. If I sell more products, now I might have spent more money on marketing, all these other things, but let's just keep everything kind of very basic. If I'm selling the same widget every single time and I make it 30% on that widget, could be a service, could be a product, whatever it is. If I'm selling it and making 30%, that 30% is going to be the same if I sell 100 widgets, 1,000 widgets, 10,000 widgets, 1,000,000 widgets. My cash flow is going to increase because I'm not selling anything different. I'm not incurring more cost. I'm just selling more of this widget that I'm selling. All right. Does that make sense to everyone? All right, cool. I got a question here, but I'll get to the questions in a second. Let me finish this concept, this topic. So that's why software companies sell at such a high multiple, because especially if you're subscription. So if you have, let's say, just an example, a Netflix get the movie or get the shows once, and they keep them on the platform forever or for a certain period of time. But now when their reoccurring revenue happens, they are collecting money every single month, regardless of the number of shows that you watch. So for them, their margins are priced so much better because of the fact it's a technology company. All they have to do is just get more customers. That customer is good for 2, 3, 4, 5, 10 years, recurring revenue. All right. So their revenue stays pretty much the same. They can add more, remove more, but the whole point is they have reoccurring revenue. So whenever you're looking at business models, looking at trying to get into business, you trying to focus on businesses that's not a one-time sale. It's you want reoccurring revenue. Reoccurring revenue. Write that down. Reoccurring revenue. What does this mean? This means that the business has a model, a business model, which means I get the customer once, I acquire the customer, and then that customer pays me every single month. That's why I love real estate. I get the rental once, the property once, I fill it once, and then it's reoccurring revenue. Everything else stays the same. My mortgage stays the same. Bills might fluctuate a little bit in terms of insurance. Not insurance, electricity, water, but those things pretty much stay within a 5 to 10% difference. That's really it. So for me, that I still like steady income, steady revenue, steady cash flow. I can almost calculate what I'm going to make. All right. So understand the difference: revenue versus cash flow. You want your revenue to be high as possible. You want your expenses to be low as possible, and you want your cash flow to increase as much as possible. And you want to build on a recurring revenue model. All right. You want a subscription model. You want models where you get paid every single month, every single week, every single day if you can. And that way your revenue always is at least consistently coming in. All right. And you want to increase your margins also. Big part of increasing running a solid business is having very good margins, having high revenue and high cash flow. That's why there's a cash flow statement. I'm not going to get too complicated in that, but cash flow statement, which tells you exactly what kind of cash flow that business brings in, and then making sure your expenses are not as high as possible. Make sure you're checking all the expenses and making sure that you're getting the best rate. If it's insurance, you're getting the best quote, whatever you're doing for landscaping, whatever property you're doing, and you're making sure you're getting the best. Let's say if you're doing Airbnb, best cleaners in terms of what they're going to charge you, and that way you reduce your expenses, and by reducing your expenses, you increase your cash flow. All right. There's only a couple ways to really grow a business: increase your revenue, reduce your expenses. It's really that simple. Increase your revenue, decrease your expenses, and that automatically increases your cash flow. All right. So, and that's the game. That's the game we play. Cash flow. You should write that down. Cash flow. If you have a business or you're trying to do something, focus on the cash flow of the business. Focus on the revenue and focus on reducing expenses. That's how you win this game of business. All right. So that's what is the difference between revenue and cash flow. All right, let me get some of your questions I want to answer here. Today I don't have too much time. I'll take care of some other things. So I'm getting ready for this conference, Invest in Your Future 2024 Real Estate Conference. Come through, guys. I'm going to be there dropping so many gems and so many jewels for a lot of people. Click the link in the bio if you're on the Instagram, if you're on Facebook, click the link on YouTube. Same thing. Click the link. It will be phenomenal for a lot of people. College students can get a discount price. If you're coming, if you're having issues with finances, let us know. Email us. Listen, we have people buying tickets every single day. I just had a notification right now that we got tickets. Someone buying tickets today. We're almost running out of space. So understand, this thing is one of those things that can really change your financial future. Real Estate Invest in Your Future Conference 2024 in Norcross, Georgia. Do not miss it. It's going to be life-changing for a lot of people. All right, cool. All right, let's see here. Let's get some of these questions answered for you. Revenue versus cash flow. If you have a question, ask the question. If you want to come on live with me, let me know. Put a request in, and we can be able to see if we can get you in here to be able to get you on the live here to ask a question. All right. So I got a question here. I think this is on Facebook. Coach Kenny, I have a business, but I have no revenue. How can I increase my revenue? Great question. So to increase your revenue, you do a couple of things. First of all, you have to look at the product or service you're selling. Is it a product or service that the market wants? Because if you don't have a product and service that somebody wants, you're not going to have any revenue. So I can't teach you to market a product that the market does not want it. All right. So you have to really look at the product. Is it something that you liked and you chose for the marketplace? Or is it something that you tested and said, hey, friends and family, would you buy this? How much would you buy this for? That's what we call case studying or looking for. Another question here, but I'm going to finish your question. That's called testing the market. All right. So I don't know what you're selling, I don't know what your product is. I need a little bit more information. But if you have a product or service and no one's buying it and you've been telling everyone about it, most likely it's a bad business or bad product. All right. So you can't market a bad product. So you might have to think about what product you're selling. What's the price point? Maybe your price is too high, and look at who you're selling it to. Ask yourself, who's my avatar? Who's the perfect person for this X product? If it's your mom and dad and all these other people, that's not really a good marketplace. You have to ask a stranger. You have to ask somebody maybe at your job and ask them, hey, would you buy this? Or send them to your website. Say, hey, would you be interested in this? I think I'm looking at buying this, and see what they say. Because if you tell them it's your product, they might want to be nice and say, yeah, I'll buy it. But if you tell them, listen, come with a neutral mindset and say, listen, send them to your website or get a sample and say, what do you think about this product? And hear their actual advice. Don't don't pretend to listen. Actually listen. Like, don't pretend to listen to people's advice or people's information, especially the general public or the people who buy your products and services. Listen to them, you know. And if they say, "Oh, or service, I'd pay $20." Okay, cool. The product for $10, whatever you get the product for. Now you see that there's a margin. All right, there's a margin there. Now, how much is going to cost you to ship and all these other things? You got to add those in because it's going to reduce your margins. But once you find out the product is actually wanted by the marketplace, the service or product is wanted by the marketplace, there's actually decent margins, then you can start selling it. All right. So that's simple. And that's where you can increase your revenue. You have to find a service or product that can work. If somebody says this is whack, this is terrible, ask 10, 20 people. That's why you want to get a nice sample size of what the people are saying about that specific product. If they're saying it's great, 90% saying great, okay, good. Now you can figure out how to put a landing page together, how to put a funnel together, how to put together a marketing, a sales team, or something like that to be able to market this business or product, or put together a Facebook page, or put together something, a free workshop, whatever it is, to get the people to know about the product. Now, if they say, yep, it's good, okay, yep, I'll pay $20 for it. Okay, cool. Now find out from your supplier, what's the lowest I can get this product for? Okay, cool. I can get it for $8, $10, whatever it is. Okay, good. There's some margins in there. After I ship it and I pay everyone, I pay my accountant, I pay the taxes, I pay everyone. How much am I left with? Okay, I'm left with $5. Okay, good. My cash flow is $5 on each product. Good. That's revenue minus expenses. I get my cash flow of $5 per product I sell. Now, your job as number one as a business owner, because you probably can't hire anybody, is to sell as many of these products as possible and sell as many widgets as possible. That's your job to increase your revenue. Get out there, hustle, grind, post, get live, do whatever you need to do, create connections, create JV partnerships, do whatever you need to do to get that product sold, because it's viable. The market wants it. If the market doesn't want it, don't sell it. Look into something else. All right. Cool. Great question. All right. Let's see what another question we got here. All right. Coach Kenny, I have 2 single family rentals. They are not cash flowing right now. What can I do? Okay. So you have 2 rentals and they're both not cash flowing. Okay, that's tough. Now, because the biggest part is, at least I hope you're at least breaking even. I hope you're not coming out of pocket and being eaten alive. So I've had that issue happen too, where a property did not work well and it was coming out of my pocket. So understand you have to get out of that situation as quickly as possible. But if you have a property or 2 properties and they're both not cash flowing, you have to look at the market and say, okay, what am I charging per rent? What am I charging per room? Whatever you're charging, however you're charging it. And find out, is the market feasible to charge a little bit more? I don't know if you have leases. I don't know if you're doing month to month. Figure out if you have month to month, look at the marketplace, figure out what the market rent is, see if you're above or below it, or if you're maybe right there. If you're right there, you're most likely gonna have to wait a little bit and wait every single year and just bump up by $4, $5, $10, $20, whatever it is, on each property. All right. If you already have a lease, you have to wait until the lease is done to be able to bump up the rents. If I suggest if the property is vacant, try to look at a different model. Maybe short-term rental might be able to increase your revenue and cash flow in that property. If you have no tenants in there, get somebody in there as quickly as possible, but make sure you vet them right. And if, let's say, it's, I remember there was a house that a friend of mine had that was too big, so no single family could rent the whole house because it was too expensive. I think it had like 6 bedrooms, 5 baths, like 3 levels, and he was trying to rent it to one person. I said, hey, listen, friend, that's probably not going to work. No one's going to pay $7,000 per month for this house. All right. So what you're going to do is, what I suggest is you try to rent out room by room. All right. Room by room. And he ended up making a lot more money by renting it room by room. So he wasn't able to rent the whole house out to one family, or he wasn't able to really Airbnb it because it's such a big house, but he was able to rent room by room. So he had 6 bedrooms. Each room he rented out for, I think, $800 per month. Each room had a closet. They had bathrooms to share, but he was able to rent out each room quickly because people can afford $800 per month. A lot more people. It's a bigger marketplace for $800 per month than one giant house at $7,000 per month. Not a lot of people can afford that. All right. So my friend ended up, I told him, listen, rent out room by room. Make sure you vet them, and make sure you have somebody in the house that you trust that can watch everything for you. So make sure there's no issues, make sure they clean up, make sure those things, maybe give them a reduced amount. Instead of charging them $800 per month, you charge them $600 per month. You say the $200 per month is going to be a credit to where you clean up every single, the common areas, the kitchens, the baths, the living room, you vacuum, you do these things at least once a week, and it'll help you with the maintenance cost of having a lot of people in the house. Because remember, when you have a house that has multiple tenants in there, since you're having 6 bedrooms, you're having 6 different tenants, each one's going to be different. Each one has different eating habits, different everything, living habits. So there's going to be a lot more action, a lot more traction in the house. So you need somebody to keep up with it. And he ended up finding somebody really well, I think a family member, to rent it for one room for $600 a month. They were able to keep it. And now he was renting it and making a couple $1,000s per month. But he had that house empty for 6 months because he was trying to rent it at $7,000 per month. All right. So his revenue increased because he's changed his model. He changed how he thought. I helped him out with that, and he increased his cash flow from negative cash flow to positive by being able to do that. All right. So remember, use your brain and use different resources to help you outthink and be able to increase your revenue, increase your cash flow. All right. What are the questions we have here? I see some more people joining here on Instagram, and also I see people here on Facebook. Questions, ask your questions so we can be able to answer them for you here, especially when it comes to revenue and cash flow. All right, I have another question here. Let me see. Let's see. I can't really read it here. Okay. Yes. Okay. Okay, Coach Kenny, I have a business that has revenue of $16,000 per month. My cash flow after everything is about $1,000 per month. Any suggestions? Okay. So you're bringing in 16,000 per month in terms of revenue, but you cash flow 1,000 a month. Okay, those numbers are really, really distant, and you have a big gap that you need to fill in terms of, you could do 2 things. You have to find out every single expense you have in your business and find out why the expenses are so high where your cash flow is so low. All right. You have to figure that out. You have to do some deep diving into your numbers. You guys know your numbers, but also if you're cash flowing $1,000 per month, you're making $16,000 per month, something's off. You might need to increase your prices on your products or service. You might need to reduce your overhead. You might need to reduce your expenses. Not even might, you probably have to reduce your overhead, reduce your expenses. You have to look at every single software, every single subscription you have, and see if there's a cheaper version for it, because your cash flow is way too low for what you make per month. All right. Oh, okay. So no, so okay, so correction. I revenue $1,600 per month. So you put 16,000. Just make sure you change that next time. Okay. So he says he makes $1,600 per month, and he cash flows. Beautiful. You're in a good situation. Now you got to make sure you sell more. Sell more. I thought you said you revenue 16,000 and cash 1,000. Okay, no, that makes a lot more sense now. Yes. So now you got to focus on marketing and sales. Find out how you got the last 5 clients, last 10 clients, and just use that method to the fullest. If it was word of mouth, tell more people about your products. If it was going out, maybe marketing a car or doing something like that, more people out there to see what your products and service is. Also, all those people that bought products from you, ask them for a Google review. All right. If you have a Google My Business, in which every business owner should have Google My Business, you should definitely ask every single customer and every single client that you interact with, especially after you give them a good product and good service, ask for a review. Ask for a review, because that's going to help you find other customers who might want your product and service. All right. If you don't have a Google My Page or Google My Business, get one immediately and get people on there to give you reviews. Good reviews are great. 5 stars are great. 4 stars are okay. If anybody's going to give you 1 or 2 stars, find out why also. Ask them, hey, what's the reason for this? How can I help? How can I have done better? Because that will help you improve your product, make you make adjustments. That way the next review is 5 stars. Okay. But good job on that. I like that. You started with a business, you make $1,600 per month revenue, cash flow $1,000 a month. That means your expenses are around $600 a month. I want to ask you if you're paying yourself on that, but if you are not, that's okay, because you're starting out. It looks like you're someone young who wants to start out. Get that business up to $16,000 per month, though. I think that's where you will really start seeing some difference. All right, cool. Any other questions here? Any other questions? Guys, don't forget, click the link, Invest in Your Future 2024 Real Estate Conference, Norcross, Georgia. We still have a couple tickets left. Don't miss out on this opportunity to really learn on how to get your finances right, how to increase your cash flow, how to buy a business, how to sell your business, how to get your credit right to be able to get hundreds of thousands of dollars worth of loans. Listen, I have hundreds and thousands worth of loans because I got my credit right. All right. That's the only way I can do it. You can't just walk in the bank and ask for a loan. They have no idea who you are. They have no accountability of what you've done. But if you come in with some experience, come with some decent credit, and credit, that's all it is. Credit is experience with money. How are you handling your money? How are you handling your debt? That's the only way people can give you loans. All right. So build up your credit. Come to the conference. Learn from people around you. You never know who you're going to be sitting next to. The person next to you could be a person who could help you. You could joint venture. You can become partners. But it all comes out to stepping out of your comfort zone and coming to these conferences. All right. I've met so many great people at conferences. I think you guys need to come to this conference, Real Estate Invest in Your Future 2024, Norcross, Georgia. Do not miss it. Click the link. We still have some tickets left, or go to www.kgcinvest.com. Again, www.kgcinvest.com. All right, guys, if you have no more questions, I'm going to get out of here, and I'll see you guys later on. I'll see you at the top. All right, have a great day.